All right. Well, we're going to take this to the next step then a little bit. Because candlestick analysis dramatically improves your analysis of what's going on based upon what the Japanese rice traders have provided us over the last 400 years, is candlestick signals and patterns that pretty much tell us what goes on in the reoccurring investor sentiment. So we can analyze trends, whether it's a market index and or an individual stock, very clearly based upon trend analysis and then the trend channels. So as I go through this, don't be afraid to ask questions as we go along. So I'm going to do this based on that I anticipate most people know about the signals and patterns. And so the rhetorical question, why is trend analysis that important? First of all, if you're a swing trader or you're trying to position your portfolio in the right direction, you want to know which direction the market is heading overall, or whatever you're trading is heading in an overall direction. So anytime I do an analysis of a trend, the important criteria is the signals, the patterns, where we are in stochastics as far as overbought and oversold, and then anything else that we can use, like trend lines, moving averages, Fibonacci retracements. The advantage that we have as candlestick investors is we can see exactly what the investor sentiment is at important technical levels. Those important technical levels on our charts, you can see they're very simple. The 200, the 50, and the 20 are the major moving averages. And the reason we have those on our charts is because those are the moving averages that every major money manager around the world uses to make their decisions about their portfolio. What we've got the advantage of is seeing exactly what those decisions are. And we also have what we call the T-line, the 8 exponential moving average. So when we're analyzing the markets, a lot of people ask, well, why do you use the Dow since there's only 30 stocks there? Because you can analyze the Dow, the NASDAQ, and the S&P 500 visually in probably less than 10 seconds. And that's total. So we're looking for the trends. Are we in an uptrend? Are we in a downtrend? And again, the 200 is simple moving average is the red. The blue is the 50-day moving average. The gray is the 20-day simple moving average. And the black one is the T-line, which we'll go into a little bit more. So we're analyzing whether the market's moving up, down, or sideways. That allows us to make a decision based upon very simple scans of whether we want to be scanning today for bullish stocks, for bearish stocks, or if the market's moving sideways. Out of the 10,000 trading entities out there, we can find 5 good longs. If we've got a portfolio that we've got 10 positions in, we can find 5 good longs, 5 good shorts, not knowing that the market is not going to push it one way or the other. We also know that the markets move in waves. With candlesticks, we get much more clarity as when those waves are in progress, or wedge breakouts. We can see exactly what's happening at the top and the bottom of these wedges based upon the candlestick signals. The graphics of candlestick signals make everything much more clear as far as what's going on in investor sentiment. So it also allows us to hit situations as we go through our trainings every day. We're obviously looking for the candlestick buy signal that's occurring in the oversold area. But we're also looking for patterns that might be breaking out that are probably already in the overbought condition. So if we see something like this, we're looking for that breach of this trend channel. And the T-line is probably one of your most important factors, or at least it has been for me since I started trading candlesticks. I always remind people that when I started investing, I was the worst investor in the world. I was a stockbroker for 8 years and got out of the business because I realized that the brokerage firms had no more idea about what made prices go up or down than anybody else. Once I came across candlesticks, that the sage advice of most money managers to say, you can't time the market. That's because they don't know how to time the market. Candlestick signals do that for you. The T line is very simple. It's the 8 exponential moving average, and there's a very simple rule of the T line. If you see a candlestick buy signal and a close above the T line, you can stay long until you see a candlestick sell signal and a close back below the T line. Works both on the positive side and going short. You can stay short till you see a candlestick buy signal and a close back up above the T line. You can also see what type of movement or investor sentiment is in a trend. So we can see this uptrend. Notice the pullback. These are all doji indecisive type days. What's that tell us? Pretty much tells us that there's not a lot of conviction in the selling from the sellers. So we just get ready, figuring this is profit taking for the next move to the upside. So anytime we see a stage like this where it's very indecisive on the pullback, that's just telling you that's consolidation. Get ready for the next move to the upside. Or because we can analyze a trend, this is the opposite of the fry pan bottom, one of the major patterns. This is called a dumpling top. You can't make any money in this type of market. Notice how it was up one day, down the next day, up, down, up, down. You couldn't make any money, but we know what the results are coming out of this dumpling top, a very strong price move. So if you had to sit for all summer, really not making any money, you made up for it in just a matter of 2 or 3 weeks when they cratered the market coming out of that fry pan bottom. What we're looking for, that dumpling top, what we're looking for is trend channels. And the trend channels, we can see much more clearly when we can see that there's a trend line across the top. We can extrapolate that parallel line across the bottom. Notice our morning star signal right smack dab in the oversold area at the support level. Where's our next target? We can see exactly what happens once they get back up to the top of that trend channel. This is an extremely strong aspect to analyze what a trend is doing. If we can see the overall trend is in this channel to the upside, and we know that every time it hits the bottom of this channel, we start seeing candlestick buy signals. On this day, when there was a doji at the bottom of the trend channel, what should we see when we wake up the next morning? We should see the pre-market futures are trading back up. The fact that they were down 140 points on that day after the doji was sitting right here, what that tells us about our trend channel? It's being broken. We should be immediately going to the short side. At the same time, we know we're in an uptrend when on any given day the NASDAQ can be up and the Dow might be down, and vice versa. It's pretty much telling us that there's no major change of investor sentiment going on in this market. But notice what happened at the top of the trend channel. We had a doji, bearish engulfing, and on the day that the pre-market futures are showing the Dow was heading down 140 points or opening down 140 points, they were gapping down the NASDAQ. So when you combine those two analyses, that the Dow is breaking its lower trend channel and there's a sell signal on the NASDAQ and they're gapping it down, that told you definitely wanted to be out of your long positions and going short very quickly. There's some very simple rules that we can use for trend analysis. If they break through a potential resistance level, what's the next thing they usually do? They come back up and test it. We can see where the pullback was bottoming. In the oversold area, we had a bullish engulfing. A week later, we had a hammer signal, hammer harami. Where's our next target? People will say, well, how far up do you think it will go? I always say, watch to see what it does when it gets to the next resistance level. When it gets there, notice the indecisive signals we have. Tells us it's backing off. This time they backed off the 20. There's also another simple rule that if a resistance level acts as resistance the first time, usually they'll go through the second time. Then we have another rule. If a resistance level is breached, they'll come back and test it to see if it's going to act as support. How did we know it was going to act as support? Because there was a bullish harami right smack dab off the 50 telling us the selling had stopped. We're getting ready for the next price move to the upside. Basically, looking at the visuals of candlestick analysis tells us where the buy signals are occurring, where sell signals are occurring, what support levels, what type of signals we have, and what happens at resistance levels. So again, I tell people this is not rocket science. If you're trading anybody's trading method, I use candlestick signals as my first criteria, and then everything else is confirming. If you've got a good trading program that you like, overlay candlesticks on top of it. You're going to get a lot more additional information in your analysis. So if I can see we're in a downtrend, and I can see bearish engulfing, evening star signal, right smack dab here off the 50, I know that my downtrend is probably still in progress. I know to be going short in this at these levels. I've got potential buy signal here. Why don't we go after reversing our signals just yet? Because what do we need as far as this downtrend? We need to see a candlestick buy signal and a close above the T line. This morning star type signal is more compelling, especially in the oversold area, that there's been a reversal. So again, very simple. The T line is probably one of the most effective support and resistance. So I go back to the definition of the T line and candlestick signals. The candlestick signals are the graphic depiction of what's going on in investor sentiment. Or basically, it's the accumulative knowledge of everybody buying and selling during a specific time frame. You add the T line. Now remember, everybody has the 200, the 50, and the 20 on their charts. They act like magnets because everybody's watching what's going to happen at those levels. Nobody has the T line on their chart. So if you see a candlestick buy signal and it works this effectively to tell you that your trend, it's acting as support, it basically tells you the T line is kind of a natural Fibonacci type number for human nature. So if you take the graphics of candlestick signals, which are the graphic depiction of human nature, and the T line, which is kind of a Fibonacci natural support and resistance, when you combine those two, you've got a very powerful trend analysis process. So anytime I see a signal, again, there's your 45 degree on your big gap up. How long do we hang on to it? Until we see a candlestick sell signal and a close below the T line. This makes trend channels much easier to identify. If we can establish that there's a trend channel in progress, we can extrapolate what should happen when we start hitting the bottom of that trend channel. Especially in the oversold area, there's our morning star signal. Where's our next target? At least the 50, and if it goes through the 50, to the top of the trend channel. And we can see visually immediately what's happening up here at the top of this trend channel. Here's our dojis, shooting star, stochastics in the overbought area. That's pretty much telling us it's time to take profits up here and get ready to go the other direction. So anytime we have 2 points and a point at the bottom, if we just draw a parallel line, that pretty much tells us where our next target is. And we have the visual advantage to see once it gets to this target, what type of signals we have going on here. And I tell people, all you really have to do in candlestick analysis is be able to see what type of signals are occurring. And I kind of illustrate that with the fact that, or the kind of the story of the old couple getting ready for bed. And she's looking in the mirror, she's standing there naked and she said, look at me. My face is wrinkly, my arms are skinny, my butt's scrawny, my legs are spindly. She turned around to her husband and said, is there anything nice you could say about my body that would make me feel good? He goes, well, your eyesight's still pretty good. So as long as you can see, you can analyze much more accurately what's going on in a price trend. Notice when we got up here, we have one caveat to our T-line rule, which is the further away you move from the T-line, the higher the probability it's going to come back and test it. So if we're getting up here close to this reversal level, and that we're that far away from the T-line, and we see a candlestick reversal, bearish Harami, where do you think the next target's going to be? They're going to come back and test it. And if we can see the confirmation of the bearish Harami, we know we want to be taking profits up here because the market's reversing. Where is it heading back to? At least the 50, and or notice what happened down here. We saw that doji right smack dab off the 200, and it started trading positive from there. Look at our big morning star signal. Now where's our next target? See if it gets back up to the top of the trend channel. Anytime we can draw two lines, we got the advantage of seeing what type of signals or patterns are forming at the bottom of that trend channel. If this is starting to show buy signals, if we were short, it started covering our short. There's our little bullish Harami with a gap up above the T-line, our buy signal, and a close above the T-line. If we were short, we'd be covering our short and going long. Where's our next potential target? Out at the end of that trend channel. So we can see exactly what's happening when we get to support and resistance. Netflix a while back. Notice what we were having. We have kind of a little wedge formation. Then we had a bullish engulfing signal right smack dab off the 50. That told us there was a lot of strength. Notice how the stochastics didn't come anywhere close to being oversold when we saw our next buy signal. That told us we could be buying because more than likely there was enough strength in this market to push through the top side of this wedge channel. So we're looking for those trend channel breakouts or a resistance breakout. Again, there's our morning star signal occurring right on the T-line, stochastic still heading up. A morning star signal, a candlestick buy signal right here at the breakout level gave us a good prospect that we were now heading up into new territory. Same scenario on the downside. If you see you're in a downtrend and you see the first major resistance level, there's a left-right combo, bearish engulfing signal. What does that tell us about our trend? That more than likely they're not heading up, they're continuing the downtrend. So deciding how much, or when you're doing your scans at night, whether you want to be predominantly long or predominantly short, is nothing more than analyzing what the overall market's doing. There's our evening star signal in the Dow. Look how far away we are from the T-line, coming back and test it. What's our definition of going short? When we see a candlestick sell signal and a close below the T-line, told us our downtrend was in progress. Notice what happened when it got to the next major support level, the 200-day moving average. With stochastics in the oversold area, a huge morning star signal and a close above the T-line. How long does our uptrend last? Until we see a candlestick sell signal and a close back below the T-line. So this just allows us to have our analysis where we know we're heading in the right direction at the appropriate time. I'm trying to see how much time we have left. I don't want to go over. If we're looking at patterns, there's our fry pan bottom. Notice what we have right here at the breakout, a doji bullish confirmation. We can be buying. Now remember, we're usually looking for buy signals that occur with stochastics in the oversold area. We're usually looking for a fry pan bottom or a J-hook pattern breakout when our stochastics are already in the overbought area. This past summer was probably one of the most deadest summers I've seen in a long time. You could see what the trend of the market was. Just absolute sideways. Absolute sideways, starting from June all the way to election time. But even when they're moving sideways, we can see the different patterns. This is what we call the scoop pattern. Notice how flat your handle was right here. There's the scoop. And notice what started this, dojis, gap ups, And what do we expect coming out of a scoop pattern? A strong price move. How long do we hang on to this? Until we see a candlestick sell signal and a close below the T line. But we also have the benefit of knowing that we can get right back into a trade. If it closes below the T line and does another buy signal, we know that now this pattern, which is a J-hook pattern, is in progress. Trend channels just allow us to see where the tops is and where the potential bottoms are, and then allowing us to project where our next targets are. So whether we're trading stocks or options, we can make a calculation of whether we want to be buying calls outright or a bull spread, selling a put spread. We can have a lot more accuracy as far as where our next targets are going to be. So after that dismal summer, there was our little kicker type signal that started the uptrend. For a while, it went flat. And after it went flat, notice what happened here. We started seeing the breakout to the upside, and this market stayed strong. On the NASDAQ, we had the inverted hammer gap up. Again, these are all indications that the bulls are coming in with great strength and telling us exactly what's happening in our market trends. This is what the trend has been doing. I think I've got a more updated chart. This is what we call the classic pattern. Again, this is the advantage we have with candlestick analysis, is we can see which patterns are working. There's our fry pan bottom. As you can see, you couldn't trade this one way or the other for weeks on end until we had the breakout of that pattern. What do we expect coming out of a fry pan bottom? A very strong price move. When did our sell signals occur? Up here in the overbought area, you start taking profits. But what's a prerequisite for a J-hook pattern? A very strong price move. Notice when it pulls back, it starts giving us buy signals. So we know if we're starting to buy here, what our upside target is. Wave 1 and wave 3 are usually going to be the same magnitude. So even if we miss this move, we could pretty much calculate what the next move will be based upon this whole pattern set up prior to this. We're in Kara right now. You can see the trend channel in Kara. As a matter of fact, Kara is up a little bit stronger today. I forget where it was, up about $1.63 on the day. But where's our target? We're waiting for it to come back up probably to the top of the trend channel. What happens there? We just see what type of signals we have once we get to that level. Notice where it was a good place to be buying, at the bottom of the trend channel with stochastics in the oversold area. Again, look what happened on the Dow in this latest run. Doji gap up, your best friend. We call it your best friend because anytime you see a doji followed by a gap up, not only are you going to be in an uptrend, you're usually going to be in a very strong uptrend. Where did the selling start in the Dow? Notice what they did up here. This is what the Japanese rice traders kind of illustrate for us with signals and patterns. I better do a sound check. Does somebody want to put a indication that everybody can hear me all right? Okay, everything's good. All right. Because before I started, the system locked up and I had to reboot. Okay, good. So this is the basis of candlestick analysis. The Japanese price traders tell us where do most people sell? They panic sell at the bottom. Where do most people buy? They buy exuberantly at the top. So when they gap it up in an overbought condition, one of the trainings we do is how to use the gaps effectively with candlestick signals. If they're gapping it up in the overbought condition, That's probably the exuberant buying. What do we start doing? We start watching for our selling and taking profits. This is today's trading. Notice where we are. Stochastics down close to the oversold area. Yesterday, they gapped it down and started bringing it back up. And where did they do that? Right smack dab off the 50. Wow, the Dow right now is up 102 points. So more than likely, they're just climbing up to test, see what happens at the T-line. And the confirmation today, even when the market wasn't moving earlier this morning, which we could see what was happening in the Dow transports. Kind of that little belt hold piercing signal. And then earlier today, the transports were trading up when the Dow and the S&P were trading relatively flat. So the advantage we have, again, with candlestick analysis is that we've got the visual advantage of seeing what's happening exactly at important technical levels. So we're watching right now to see what happens at the T-line area. If they bounce off the 50 in the oversold area and come up through the T-line over the next couple of days, what's that tell us about our trend? That we're probably in our next wave to the upside. All right, so with candlesticks, you don't have to worry about formulas. You don't have to worry about price percentages. It's just common sense visual analysis. And it's based upon the most common and consistent indicator in the world. That's human emotions. So I think with that, Pat has done a special for how to utilize this information. I think this is a $147 video training that we use for using candlesticks and analyzing a trend. She's got it available on this for this session for 17 bucks. So the question is, why do you have something that's that valuable selling for so cheap? Because what I discovered through the years was that, let's see, I'm going to try to put this in here somewhere. Oops. Renee, can you stick this into the chat room? I never figure out how to. Bah humbug. But through the years, I would always ask people rhetorically, well, Shazam, I could never do this, right? I'd try to get the link. Oh, poo. But I would ask people rhetorically, why isn't everybody using candlestick analysis? Because it's just got so much common sense in it. Renee, I'm sending the link to you. Can you put it in the chat? So for 17 bucks, what we're trying to do is get people to analyze how to use candlestick signals effectively. And basically, again, it's just common sense put into a graphic depiction of what usually goes on in human nature. So, as I have mentioned before, when I started using candlesticks, I was the worst investor in the world. And then every time I looked at the chart and said, wait a minute, this makes sense. And the more I studied it, the more sense it made. So now basically I'm buying buying at the bottom when everything looks dismal and taking profits at the top when everything looks rosy. And the Japanese rice traders basically pointed out which signals told us when to be buying and when to be selling. So I guess with that, is there any questions? I guess most of you have seen the presentations before, so I'm guessing there's not that many questions out there. Oh, somebody was asking at one time what is involved in our website. Our website is we have chat rooms open all day long. One chat room for option traders and futures traders, the other for the major room. Usually have about 180, 190 people in there. But we've got people that have been analyzing candlestick charts for years, and they pretty much can identify which patterns look the best. So it's got two benefits in the chat room. One, it helps you learn candlesticks a lot faster. You've got some place to ask questions. And two, there's always a constant supply of very good trades out there. So I put out 2 or 3 stock picks every night, not so that people just have stock picks, but we do it in a video format that when you look at the video, you're still in a learning process of why those stocks were recommended. And I always tell people, if you just tell people what to do, they don't really know why they're doing it. It doesn't do them any good. And it's kind of like the cop that was standing on the street corner, sees this drunk come weaving down the street, blows his whistle, pulls the guy over, and as he walks up to the car, he sees there's a penguin sitting in the back seat. He goes, yeah, I think the link, I think Renee put in the link for everybody. Oops, and I sent it over next to Nikki's name. There it is. Okay. So the cop comes up and looks in the back seat, and there's a penguin sitting there. He goes, "What the heck are you doing with that penguin in your back seat?" And the drunk said, "Oh, I found him out on the street, and I don't know what to do with him." And the cop said, "Well, take him to the zoo." The drunk said, "Oh, that's a good idea. Didn't think of that." Next day, this cop standing on the corner, this drunk comes weaving down the street, blows his whistle, pulls the guy over, walks up to the car, and there's a penguin sitting in his back seat. The cop said, "I thought I told you to take the penguin to the zoo." Drunk said, "I did, and we liked it so much, today we're going to a baseball game." So if you don't know why you're doing something, it doesn't do you any good. Definitely, yes. During the day, I will come into the chat room usually around lunchtime, and we go through for about an hour, going through all the stocks, which ones are working well, which ones you should be taking profits. If you've got stuff in your own portfolio that you're wondering what to do with, you put them up and we do a quick analysis. But it's, again, the analysis is so you can recognize when the signals and patterns are working effectively, and when a trend is not working, or when you're starting to see sell signals. So again, if you've got a trading program and it's working effectively for you, throw candlestick charts on top of your analysis, and you're going to see everything much, much more clearly. All right. Oh, and I'm not sure whether the $17 gets you a week of free access to the room or not. I don't know whether she put that in there. All right, any other questions? As I say, most of you have already seen my presentations before, so. All right, with that, then, Renee, thank you for the invite. I know we're done a little bit early.
All right, thank you, Stephen. I appreciate you coming out and presenting to our group today.
Yeah, okay, let me, yeah, is that Niger? Yes, candlestick signals are the accumulative knowledge of everybody buying and selling during a specific time frame. It works just as effectively on the 1 minute chart as it does the 5, 10, 30, or 60-minute chart, or the daily, weekly, or monthly. I used to trade the E-minis off the 1 minute, 3 minute, 10-minute chart combination. Right now I trade most of the futures like soybeans, live cattle, the dollar, anything like that. I usually trade off the 10-minute chart. For $17 renews yearly. No, for $17 you're going to get the video on the on how to use the candlestick signals and patterns to analyze your trends. That's just a one time you download it and it's yours. So yes, so the T-line works, or the T-line and the signals work on all time frames. Okay, thank you very much, everybody. Thank you for inviting me. We'll see you in the chat rooms.